And how are you doing?
Morning, everybody. How we doing today? We are live and in living color. I was all ready to go live, and then what happens when you're doing too many things at one time? Got drawn away, not by my own lust, I promise. Drawn away. Good morning. I hope that that didn't pick up like right when I said that word. But good morning, everybody. We're live.
Did you say not by my own lust?
To the market should be here now. JPOW is going to speak in about 27 minutes, looks like, and let's see what we got going this morning. I went for a walk, so my brain is already popping. This morning I had a little bit of breakfast, so that's a different. I don't usually eat a lot of breakfast. I usually have like some coffee or something, but I've had some food, and we'll see how all that pans out together. Let's see how all that goes together. Good morning, Jamie. How you doing this morning?
I'm good. Did you just say not drawn by my own lusts?
If you're talking, I can't hear you. Oh, that may be my fault. Hold on. Okay, go ahead. Were you talking?
Did you just say not drawn by my own lust? I'm just making sure I heard you right.
I knew you were going to hear that. I knew.
Oh my God. Dude.
I was saying I had been drawn away, and then I was like, no, not drawn away by my own.
Oh my God. Okay.
I was like, I hope that wasn't the first thing that was heard when people picked up the call. Like, what is she talking about?
Let's just move on with the order of services then.
Carmen said I heard it too. I was like, I hope that wasn't the first thing that was said when it went live. Like, drawn away by my own lust. What? No, what has she got going this morning? That is not what's going on. I promise. I promise. I promise. I was getting ready to get on the call with you, but I was already on another call for an event that's going to happen in Tuskegee in a couple of months. And I was listening to the call. And right at the time that I needed to start this call, they said something that I had to comment on. I had to comment. So that's why I was drawn away. This is better than a soap opera. Yeah. So I sure hope I hung up on the call because I needed to. Yeah, it looks like I'm gone from there. Okay. So yeah, I needed to. I'm going back to my alma mater. Going back to Tuskegee. They're going to have a Black entrepreneurship and something. It's called the Beats Conference, and they've asked me to be on the board and to come to the conference as a Tuskegee alumni. So yeah, I am. I'm at home today. I'm off on Fridays, so I am at home fixing your hair and everything. Okay, Miss Arlissa. Yeah, I'm still at home. The light right here just does this weird thing right in my location at this time of day. Anyway, I don't want to. I'm still sidetracked. I'm trying not to be sidetracked. Morning. Stacy says finally able to catch it at a new time. Yay! 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 Everybody's here. Yes, I'm going to be able to go back to Tuskegee for a minute as a participant, not just a student. We'll see. To be involved in stuff like this it's kind of a double-edged thing. I won't call it a sword because double-edged sword sounds bad. It can be double-edged. So yeah, you go back but there's a lot of work that goes into that kind of stuff too. And y'all know how limited my time is. So I want to make sure that it's a good connect. And so far I think it is. It'll give me a good reason to go back to Tuskegee because I haven't gone back in a while. So if I go back here, under the auspice of something very positive, it'll be good. It'll be good. Good morning, Nori. Good morning, Tamar. Hey, everybody. Good morning, Carmen. Hello, Neves. Jamie is here with us this morning. Stacy's come to join us. Ward is here. Tiva is here. And Tanya is here. I believe we got everybody. Hey, everybody who I can see. Of course, if you're on other platforms, I can't really see you on those platforms. Let me get Instagram running. Welcome in, Instagram. Twitter should be running. Facebook should be running. Hamptonian here. Look now, there ain't nothing like a HBCU bred female. Ain't nothing like it. I just didn't know it was gonna be as positive of an experience as it turned out to be, but it was good. It was really good. Okay. Let's go on to where we are this here morning. Okay. The VIX is at 16.83. Yesterday, things went pretty well. Then we had a good sell off, pretty big sell off at the end, potentially selling off in preparation for JPOW this morning. Two things can happen with JPOW this morning. One of them is he can say some stuff, and basically the market will go to all-time highs, or he can say some stuff, the market will tank big time. So it depends on, what. Either way, there's going to be quote unquote opportunities, but you definitely want to make sure that you're watching and you don't jump in too soon. Let the market decide a direction and then ride the direction. Okay. It says here U.S. futures climb as Fed chair waits in the wings. Jackson Hole history suggests Powell will play it safe. Yeah, why not? I don't think anybody's thinking that they won't do the difference with the rates. He's not talking about that today, but that he won't do something with the rates is just how much. How much of a move? Tech bundles turn to age-old upsell employee French fries. Okay. Now, I was saying the market will move. I think if it makes a pop, the indices are going to make a pop. Finance piece, XLF. I was listening to a call yesterday where XLF was being touted as the thing that could definitely take a good run because it's poised and ready. That's one area that is highly impacted by what's going on with the Fed is the financial sector, right? Um, but if things start to tank or start to drop off, the sector that will get hit the hardest in a drop will be the tech sector, which we've seen that because it's the sector that's up, kind of hanging out at all-time highs already, and that could be the one that will take a dive. So keep that all in mind. What to listen for when Powell speaks at Jackson Hole? We can't go into that now, but all basically everything, everybody waiting, still waiting. We still waiting on to see what happens, right? We're still waiting to see what he says. We know that our biggest thing this morning is Jackson Hole is going on. Fed Chair Powell is going to speak at 10 o'clock. New home sales at 10 o'clock also. Orange folder. Harker will speak at 11, orange folder. Jackson Hole Symposium will continue through the day. And FOMC member Goolsby, 12:30, speaks at 1:45 and 2:15. He or she must be speaking at multiple places. And then Jackson Hole will continue tomorrow. Okay, we'll continue to go on for tomorrow. Okay, I'm running a little behind because I had to talk about my little thing. Hey, Lisa. So now we need to see. Kava had earnings yesterday afternoon, yesterday after market close. Workday, Ross, Red Robin, they all had Intuit. They all had earnings yesterday after the market closed. And this morning it's people I don't know about. GFT, I think, and HAFN. I don't know them. I don't know them. So Kava, folks were looking at Kava and thought that was an opportunity. So that may be something to consider there. Adam says, excellent follow through overnight in SPX. 55.63 to 68 was key support. And as written in last night's newsletter, the longs were taken from there. It's bull line, and now plus 35 points. Plan today, size down, hold your runner, wait for Jackson Hole. 56.05, 56.21, 56.28 are up next. 55.63 and 68 must hold. That's the support. Okay. So notice Adam has not given much downside. He didn't say if so and so holds, then you know. He didn't do that. He just said that 55.63 and 55.68 must hold. Right. So let's see what that is. If you're trading XSP, you got 562 on the call credit spread side, maybe 563. And you got 556 on the put credit spread side. Okay. If you're trading, go with 563. And I say again, make sure that you're keeping in mind that if it runs, it could potentially keep running. So you want to, watch. Nori asked yesterday in our training about how do we set an alerts for, if your strike is going to get breached, and I put that in our notes there. We need to take that video and cut it up and use it as some content. I'll look at it to see if that's something we want to do. But okay, now that I've talked about what I wanted to talk about, the stage is yours, sir.
Well, that was a weird pass off. Okay.
Yeah, here we go.
Good morning, people. Hope all is well. This is your tech update for today, if you will. So here's what I got for us to be aware of. Matter of fact, I will. You want me to share my screen? I really don't have a huge list or anything, but guess it don't hurt to have a. I don't even know how to do it on here. So here's what we got. Last time we were on, we were talking about Intel and how Intel is laying off 15,000 of their employees. So be aware of that if you're going to be trading Intel. And I'm not knocking Intel, but if you put your business out there, that means you're giving me permission to report it. And so the thing is with Intel, the other thing that's very important with Intel is they just sold a large stake in ARM. Now, ARM, if you
Really?
recall, Nvidia was trying to buy ARM about a year and some change ago.
Yeah, not
And
even that long ago.
yeah, what makes ARM significant is because if you know anything about semiconductors, they get really, really hot. What's really happening with semiconductors is they're constantly being electrocuted over and over because this electricity is basically shocking those semiconductors over and over. So ARM has this intellectual property that will allow the semiconductors to have like reduced heat, but it doesn't affect their performance. So
Okay.
ARM gets paid like per chip. If you're using their technology, they get paid per chip. Well, Intel had a stake in ARM. They just sold over $100 million worth of their stake in ARM. So I think it was like 140 million. Now keep in mind, if Intel is still making chips, that means that they're still paying ARM for the technology, but they're at the point where they're trying to clear house and they have to sell their stake in the company. So,
Okay.
in my opinion, that shows you how bad it's getting because they got to, because all the other companies, I mean, nobody wanted Nvidia to get ARM because that means you would have had to go through Nvidia in order to get the intellectual property. So all
Right.
of their competitors was going to have an issue. And so now this part I'm about to say is not an announcement. I'm just saying what this reminds me of with Intel and what they're going through. It reminds me of AMD because about 10 years ago, let's say around 2014, the price of AMD per share was like $14. I don't know if you've
Okay.
seen AMD lately, but it's not $14. So one of the
Yeah.
things that ended up happening was when the new president came in, or the new CEO came in, she shed a lot of the foundries that they had, and she outsourced some of that work to who? Taiwan Semiconductor. So
Mm.
it would not surprise me if at some point Intel, who is also a foundry, they make their own chips. Wouldn't surprise me if they have to make that move in order to shed debt. So if you know anything about Intel, I know the only reason I'm bringing it up because some of us traded. But if you notice,
Well, we were
they have
trying
been
to, but
down.
until acts so dumb.
They have been they it has been going down since for the longest, but it's a huge drop this year. So that's something to keep in mind. Once I saw them selling that stake in ARM, I was like, okay, this is gonna be some trouble. Cisco is also selling 7%, not selling, they're also letting go 7% of their workforce.
Oh,
So that's a significant amount of workforce when it comes to Cisco. So you definitely want to be aware of that. Of course, when people are letting the workforce go, that means that they're also cutting debt. So let's say to the shareholders, that might look good. Whether or
yeah.
not this fair or unfair is a totally different approach. But and then the other thing I have is be on the lookout for Amazon because they're testing their Prime Air drones delivery service in the United Kingdom.
Mm.
They've already launched in 2 U.S. cities, one in Texas and California, but it's only up to 5 pound packages. But they are definitely trying to get that up and running. And
Mm.
then for those of you who trade Palantir and or Microsoft,
Volunteer.
they've partnered
Mm-hmm.
together to sell like AI products to U.S. defense. and intel agencies like cloud analytics and like AI capabilities and stuff like that. So don't be surprised if you see any type of pops um, in stock price as it relates to those two. And then the other one, I have a correction from myself on. I think it was on Monday. We were talking about Nvidia, and I mentioned Miso Robotics, which is the name of the company who is a disruptor in the restaurant industry, and they have an entirely, robotic restaurant in California, and I couldn't remember the name of it. I thought it was called California Pizza Kitchen, but it was actually called Cali Express by Flippy, is what it's called. Cali Express by Flippy. And so they partnered with NVIDIA. Miso Robotics has partnered with NVIDIA. And so NVIDIA is, I have brought up NVIDIA on Monday because a lot of people are connecting them just to AI. And I was saying that they're way bigger than AI. They're trying to get into everyday objects and make stuff like robotics and things like that, taking it to a whole different level. So anytime you hear about somebody protesting for $20 an hour to flip a burger, just remember Miso Robotics got a computer arm that they training. I'm gonna put the video in the chat, but they got an arm that they training to do that same work. It was bound to happen, but so Nvidia has a lot going on. So even though Nvidia might pull back, I'm not one of the people that think that they down and out. So that's just my opinion, but that's what I noticed for this week.
Thank you so much. I do agree that I hope nobody's thinking that just because the Nvidia stock may be coming down that they're like gone, because like you said, it was good at business to just be in multiple spaces and utilizing your resources to be in other places. So Nvidia, Taiwan Semiconductors, AMD, all those ARM, Intel. I mean, it's almost like people keep wanting to breathe life into it, and then we're trying to breathe stuff into it. It's just, and maybe cutting people is going to help their bottom line, and maybe they'll be able to recover, because I think they're a player in the space. It's just somehow they've got to get themselves together before they are no longer a player.
I'm not gonna lie. I mean, what is it? Rejoice not in the calamity of others.
Absolutely.
I don't think that them jokers are gonna recover.
Okay.
A couple years ago, this all goes back to a couple years ago when they dropped the ball, and it was something like I think it was like they were supposed to have like the new chip, and let's say if they had let's say if the new chip was supposed to be like, we'll just call it 7 nanometers. We'll just call it, that's the name of it. Mm-hmm. And whatever was going on at the factory, they didn't have the chip, but they was like, well, we don't got this one, but we're gonna have the 5, which was the newer one. Mm-hmm. Well, AMD had a newer chip. So AMD was able to step in, like, hey man, we got the chip that they ain't got. I just don't think at this point, with all the competition, I don't see how Intel is going to be able to recover and get back to market dominance. I don't want to say that it's too late, but it's like everywhere you look in the spaces that they've been, they got more competition now. Okay. It's just too. So I'm not saying that
because they've slipped enough, they've given time for their competitors to step in.
That's the way it seems to me. I mean, the whole point of the CHIPS Act was to create a pipeline for semiconductors, so we wouldn't have to rely on China. So if Biden created the CHIPS Act, why are you laying off 15,000 people? Like this is billions of dollars that's supposed to be available for future work. Somebody ain't doing something right.
Yeah, well, somebody else is gonna get their bit. Well, and Intel has gotten some of the money, because I think Janae always mentions Intel got some of the money.
Well, yeah, but I'm saying apparently not enough to not have to lay off workforce.
Not enough to get it together. Get it together. Yeah.
Like I thought that was the whole point, is to make sure that you got something going on. So it wouldn't. I mean, I'm not saying that they're gonna go bankrupt. That's not what I'm saying. But I am saying it seems like there's enough happening where they might not be. I mean, you think about it. Um, Once you get to the point where Microsoft and Apple are designing their own chips for their, for their purposes, that means that they don't need Intel even more, right?
Yeah.
That's one
True.
less, chip maker that they need to deal with. So,
True.
um, I kind of feel like they dropped the ball and they kind of have been making themselves irrelevant ever since.
Mm-hmm. Mm-hmm.
But that's just my opinion. I'm not saying that, I'm not looking at the books on that. I'm just looking at basically mostly the chart. And
Which is enough.
seeing where these seeing where these jokers is falling off.
Yeah. Okay, cool, cool. Thank you so much for sharing that with us. Let me go get us the right screen on here. Of course, when I get ready to start pushing the buttons, it takes forever. That's like Stacey said. That's like Polaroid. Yeah, Polaroid, Kodak, a few companies, Blockbuster. We could name several companies who, at one point was quote unquote king of the hill, and then thinking they were resting on their laurels, as one would say, only to realize that your laurels already left. So right, you need to get yourself together because the people who you thought was just going to be always here have now gone on without you. That seems to be Intel's situation. I'm with Jimmy. I really hope that they can. I feel like they were a player and they could come on back, but they've just not shown us anything that's really great to say why should we keep riding with them, right? Patting their pockets and rehiring at lower pay rates. That's probably true. Now I think it's interesting the people protesting to flip burgers. Like, please, please, please let me flip burgers. No, I worked at Burger King when I one of my first jobs. I told y'all I got fired from Burger King on my day off. Like, who does this from a anyway? Uh, but I worked at Burger King, and basically, you just dropped for Burger King. You just dropped frozen meat into this broiler, and it went from one end to the next. Of course, there was more steps after that, but that was the main step was just dropping in the meat on the at the end of the broiler. Um, and I feel like though the human element is still going to be needed, even though you may have a robot that can do some of the jobs. Like the robot can manage the fries because that's nothing to do but put fries in the container, drop it into the grease, have the timer set, let it cook and pull up. But making burgers, it really still, in my opinion, still needs a human element. Yeah, I was at Burger King acting a fool on my day off in their parking lot. Well, I wasn't acting a fool. I just was being 16, which is how old I was. And the next day when I went to work, they were like, yeah, we're good on you. I was like, what do you mean? I go fire me. It was my day off. They're like, yeah, but you're a Burger King employee outside acting the monkey. So, never mind. I was like, okay. I ended up leaving there and going to work at a law office. So I didn't like working there anyway. I got the job because my mom push me to get a job. I didn't want to work at a fast food spot anyway. I felt like I got more to offer the world than a fast food spot. But it did teach me some stuff.
Yeah,
It taught me some stuff really fast.
my mom was totally against our first job being fast food. So that made it a little difficult to make some money. But I will say this when it comes to the whole fast food thing, when you were just talking about protesting about flipping burgers, the thing is, I remember when I left for college, if you were working at a fast food restaurant, that you basically had that you were making that's a job for teenagers.
Yeah.
That job was not designed to be trying to pay your mortgage and trying to pay your rent. Like, so I remember when I left for college, you knew who was the manager of the Burger King because it was usually whoever was the oldest person. And then I
Yes.
get out of
Who
college.
have been there the longest.
Yeah, I get out of college and come home and I'm like, why are all these older people working behind the counter? I didn't realize people was taking that as a job on purpose,
Yeah.
and I was like, this is crazy.
Yeah.
So once you get to the point where you're trying to take sneaker money and pay your actual big bills, yeah, you're gonna feel like you should get paid more money. But watching somebody, unless you figured out a new way to finesse flipping the burger that like they can make money on, no, you ain't talking about I deserve more pay. How?
Yeah. I just,
How
of
do you
course,
get
there's
time
more.
for pay?
For all that you have to manage and go through. I mean, you're managing basically your program manager if you're working at McDonald's. If you're a manager or an assistant manager at McDonald's, you're managing like a program manager because it's all the pieces and parts are still there. You're managing the people, you're managing the product, you're managing the customers. I mean, I can see there's a lot to it. Right? I can see that there's a lot to it.
No,
Um,
I don't mean like the manager. I'm just saying like
the person
the
who's
people.
making the burgers.
Yeah, they taking the orders and stuff. It's like when you're doing the same job, let's say each day.
Yeah.
So if you're doing the same thing each day and you haven't done anything different or
Right.
revolutionized, why are you thinking you should get more paid for doing the same job?
Well,
I
because the
mean,
hourly wage of workers has gone up. So it's not based on just what I'm doing, but the minimum wage is going up. And if you want to keep workers, you need people in here. So this is the kind of job too that needs people, needs bodies. So if you want people to continue to come and be consistent, so that we can push out the people out that back off around that circle in a certain period of time, then you need more people to do that with. And if you want people here, you got to pay those people because if they got choices that are going to make money other places, they're going to be at them other places.
I mean, I'm not disagreeing. I'm just saying you probably need to go do some job training once you get past a certain age.
Well,
Uh, you know what I'm
could
saying?
be.
Like
Hmm.
you passed your prime on the burger flipping. Once we get to a certain
Maybe.
point,
But if you've done this for years, if you've done it a long time, you're definitely highly experienced. You know what I'm saying? There's something to be said for having experience in the industry.
okay, I ain't knocking it, but I think that's sneaker money.
I'm not disagreeing with that, but I'm also saying too, there's some things where you'll feel like, why we here? But then you're like, if let all these McDonald's close. We need them. You need those. You need the McDonald's and the Burger King. You need people to be to roll through with their drive. You need that. So
Oh yeah, I'm
hey,
not. I mean,
right, I do too.
agree.
I think we're saying similar things, right?
Yeah, I
I'm
mean,
just
I
saying
agree with you. We need them, but I do think that also the closer you get $20 an hour, is the closer you get to more robots doing the work. That's
this
all I'm
is true.
saying.
I can go
Because
with
it's affecting the bottom line.
the bottom line. I can give it. Well,
Yeah,
yeah.
that's
If
all I'm
you tried to
saying.
buy a Big Mac meal in a while, it's $10 for a Big Mac meal. I was so shocked. I told you I told
Listen,
that story before, but
I'm
it's like
surprised it ain't 20.
it's going. Listen, it's going. It's
You
definitely
know,
going there.
when they get to the point where Happy Meals make you depressed, we know we in trouble.
But Happy Meals don't make you happy.
We know we in
Happy
some
Meals
trouble.
make you unhappy. Then you're like, yes. Wow, that is funny. Funny. Okay, so in September the 1st, we're actually starting the From Basics to Breakthrough, which will be our September charting challenge. I know there's a lot of people who are listening or in this space who really need to get better with charting. You know it, and I know it. Okay, so it ain't no shame in the game. The only way you're going to get better is to get better. All right, but we're offering it in the membership. You're going to go from basics to breakthrough. You got the educatortotrader.com. Go ahead over there and sign up for the membership. I'm actually going to put this graphic there. That way it'll be easier to find what you're looking for. And that's what we got going for September. All right. Come on and join us within the membership, and you'll get all the perks that go along with the membership along the way. Let's go look at some charts. Do we have anything we want to look at today? Anybody got chart ideas? I'm going to go here and check out what the market is doing. I'm liking that move on Palantir. This is a good thing. My Palantir trade is looking real sad, but I needed to come on and look a lot better. So that Palantir jump we were just looking at was positive, was a good positive move there. Come on back and recover, buddy. Okay, this is SPX, right? Jackson Hole has started. Powell is now speaking. I guess it's 10:02. The market made a pop here. Let's see if that pop holds or not. This might be what they call a gap and go. Basically, where it gaps up and it keeps on going. A gap and a go. All right. You want to look at Lilly? Yeah, $10 for a Happy Meal. That is asinine. Shows how long I've been in. long since I've been in Mickey D's. Yeah, I mean, I got a Big Mac. I went for a Big Mac, but I did not end up buying it because I didn't want to pay $10 for a Big Mac and some fries. So I ended up getting some chicken tenders, right? From because I was like, I'm not paying $10 for a Big Mac meal. I don't care. Because I know this ain't even hardly real beef. I mean, it might be some, but it's only some. It ain't all real beef. So I'm like, I'm not paying this much for fake meat. Just not doing it. Okay. SPX is what's going on here. We had a gap up, pause. We're on the 15-minute chart, I believe. Nope, sorry, the 10-minute chart. I'll move it to 15 because I'm used to seeing the 15-minute time frame, right? This is what's going on there. Rolling past that first pivot. Do y'all put pivots on your charts? Do you have the pivot points on your chart? That's a very good, especially if you're trading buying strategies. You may want to consider adding the pivot points indicator. You can find it on Thinkorswim and you can find it on the Trading View. I'm trying to type it here, but I've typed faster than it's keeping track of, as usual. The pivot point indicator. And basically you got the pivot point, which gives you like the middle, and then you got resistance put above it. You can see these gold lines are those, and then the below you've got supports, and you can go as high as 3 or 4 in each direction. And at pivot points, they're going to potentially place some support and resistance. So at a pivot point, you want to see not a pivot point, but at a pivot, well, I guess you call it a pivot point. This can be a zone where price may stutter or may turn back, but it just lets you know where could be your next target, depending on where you're trading. If you're trading as a buyer, right? So that's SPX. We've got SPY, which it should look very similar. And it does. Well, now, and it does. Looks very similar. That's SPY. Let's see what's going on with the Qs. Triple Q yesterday had a huge sell-off. Well, almost everybody did yesterday, which kind of lets you know that sometimes I feel like these things will, like they'll prop it up one day, so they can drag it down the next. And what happens, I don't know. It's 10 o'clock, so it's around the 10 o'clock turnaround. Don't know whether the market will continue this uptrend, because we do know that they are notorious for getting you off on one move, and people hop in calls just for them to pull the rug and snatch all this back. Y'all know they do it. All right. Y'all already know they do it. So since you know that that's what they do, it's a big money grab. You have to be careful. That's the gap that's created by the open this morning, though, is Triple Q. Okay. Lily, I believe we have Lily in the chat. Carmen. Now, remember, today is Friday. We look on Fridays for next week's expirations, because we can let Theta help us over the weekend. Let's go to a daily chart. Carmen, what are you looking to do with Lily? Tell me, what are your thoughts for Lily? You're looking at it for selling strategies? What are you looking at it for? Let me see if I can get a little more data in this screen so I can see what's going on. Okay, well, this gap that was here has now been filled by the price action. By this price action, this gap is filled by that candle there. This gap here is partially filled, but not fully. And this gap has a little bitty bit left. Let's see what's above us. I always say us, like I'm a part owner of the stock or something. I'm not sure why I always say us. Looks like it's right at a resistance area. And though there was a gap here, it did get gone through, but it's currently at that place. So it could very, very, very easily turn back around here because it is at resistance. Okay. I'm trying to see if there's, and this was the high. It hasn't really been higher than this. So not that it can't go through, because aren't Eli Lilly the people who just came up with some weight? Are they the weight loss drug people? This is currently where it is today.
The Ozempic people?
Is that Eli Lilly?
I thought that was Novo Nordisk or something like that.
So what does Eli Lilly have? Then they do have to have some drugs, because they've been running
everything.
Yeah.
Yeah,
Okay.
they got a whole
So
bunch of different products.
they're currently here. I do have my Thinkorswim open today. I do see the top of this candle here, the tip top of is 971. If you're looking at it, if I was looking to trade Lily, it's been on an upward move, but I would still look at a call credit spread just because this hasn't been above this place yet. This is a gap that needs filling down here. So if I was going to get it, I'd get below this gap, which is also the support here. I'd get below that gap, which is 921, and I would get above it in the 970s. So let's go see if I can pull in. I'll go pull in my screen for Thinkorswim. We're looking at Lily. Hopefully, I don't know if you're looking for today or next Friday. I probably would look for next Friday. It may offer good premiums for today if you wanted to do a day trade. Let's look at both and see. I'm not trying to, pick out anybody's account size. Your account may be bigger than 25K in today, or this might be worth a day trade. Let's see. Let's see here. Okay, so probability out of the money. If we're looking for today has a plus minus 12 for today. This is one of the biggest. Eli Lilly gonna come out soon and talk about they splitting. That's almost $1,000 stock. Plus minus 12 puts us at what, 967, somewhere like that. It's a 5 spread though. You see, it's a 5 spread between these two up in this area. So probability out of the money looks like 965, which I said that's a little above that. 965, that's going to be 10 away, 9 away. I probably would go at 970 if it tries to bust on through. So 970, if you were going to go on the call credit spread side, 970, 975. It's a 5 spread and it's paying $56. So that's a little bit over 10%. You can go if you want to go on the call credit spread side. 979, 975. If you want to go to the put credit spread side, because it has been going up, and like I said, I would think we would go below that gap though. I will go down here below 920. Not sure if that's going to give us what kind of premiums that's going to give us. But if we look at singles, probability out of the money, really 80% is at 945. That's 11 below where we currently are, puts us in line with here. So 940, 945. Vertical, 940, 945. It's going to pay another $57. So you can put up a 5 spread and come up with 100 and something today. 5 spread brings you 113 today. That's a 20% return right there. Okay. That's for this week. That's for today. If you wanted to ride with today, let's look at next week though, because I saw your comment just now said you were looking for next Friday. Next Friday, plus minus 41. Plus minus 41. So let's look at probability out of the money for next Friday. I'd probably go in the uppers here. 990 or 995. 990 probably could work. 990 and going down here, I'd go at 920. So 990 and 920. Turn it to verticals. 920 puts you below that gap, like I said. 920 is paying, it's a 2.5 spread down here, is paying $50. That's a 20% return. Whoop whoop. 917.5, 920. Hope y'all got y'all pens out. 917.5, 920 is paying $57. And if you went up to 990, now up here you're at a 5 spread. So that's paying $75 for a 5 spread. You partner those together. And actually what you should do here then is do 2 of these put credit spreads, because this is, you want to use the same collateral. If you're going to take $75 up here and then take in another $100, so $175 for a 500. Hey, Drew. To take in $175 and leverage 375, let's say 175 divided by, I'm going to say divide by 500. 35% return on the money. Y'all see me? Yeah. If you take in 175, that means your collateral is 325. You don't even have to put up all the collateral. All you need is 325. Because it's a 5 spread. Okay, it's a 5 spread. You're going to receive 175. If you go into the places, whatever that amount is, subtract that from the 500. And that's the difference. The difference of that is what you're going to have to put up for collateral. Not a bad move for next Friday, and you possibly can get out Monday or Tuesday. Now, what I don't know is how fast the premiums draw down, because EMPH offered great premiums, but they did not draw down fast. Ugh. So you got to keep that in mind. I've never traded Lily. This might be one I'll go take into my sim. I'm trying to do better with going into my sim with stuff and testing out our theories inside my sim versus testing them out live in living color, because I'll test them out live and then be like, I probably shouldn't have done that here. Jamie says, yep, what I hear, Lily, I think diabetic meds, but I know they have much more than that. They've got cancer medications too, I think. Okay, cool. Anybody else? They also did come out with a weight loss drug. I really thought they did have a weight loss drug that they put out. Maybe it's not the Ozempic, but I'm a little nervous about some of those weight loss drugs, though. They haven't been out long enough, and they weren't out for this purpose. So the Ozempic wasn't designed for obesity. It was designed for diabetes. So it was designed for one purpose, and they found that it had other help, which of course also happened with the little blue pill. It was designed for heart problems, and they realized it helped other stuff. But I guess that can happen. But anytime you design it for one thing and it's being used for something else, and that's not what it was tested on, all right, because it wasn't tested on the people for severe obesity. It was tested on diabetics for helping the complications of diabetes. Two different things. What else do we have? What other chart we want to look at? I was going to look at the XLFs. We're going to look at some finance. I had some things that I wrote. Where did I write those? In my notes. I put stuff in places and then forgot where I put it. Anybody else had that problem? Anybody else got that problem besides me? Let's see what SPX is doing while I'm finding the list. XLF, XLRE, and then Amazon. Amazon are the ones I had set. SPX looks like it's still showing green. Jamie, you get ready to say something?
XLRE doesn't always have good premiums.
I know it doesn't have good premiums for sure. Okay. It does seem to be ready to move a bit as a buyer, though. It may not be great for us sellers. Eli Lilly makes Zepbound. What's Zepbound? Tell us more about that, Ward. Okay. I really feel like the market is going to move a bit, but we're going to wait to see what all that Powell has to say. He's been talking for 15 minutes, and then we're going to see what happens, right?
It has taken off like a rocket.
Yeah, you can see my chart right here.
I'm looking at RUT, and the MACD is just all green bars right now.
Mm-hmm. Amazon. SPX has not been able to bump across this resistance just yet. It's hovering at that resistance. This is Amazon. Amazon does have time frame continuity to the downside, I believe. Oh, no. Well, today we got hour, day, and week are all green. Not sure where that came from. Anyway, this is Amazon. Got a gap down here. I haven't charted Amazon in a while. We haven't looked at it. Michelle hasn't asked for Amazon in a minute. And I think not Michelle, Tanya decided to put Amazon down and go with Google. She got her a new bay just like you do, Jamie. She did the same thing. She put down the Amazon bay and went and picked up the Google bay. pivot point. It's at the pivot, so we'll see how it functions around this pivot. That went 15 minutes on the chart. This is the 30-minute time frame. Notice how the time frames do offer you a different look. That's why sometimes if you're trading on a shorter time frame, what can look like a bunch of movement or it looks like it's doing one thing, if you go to a higher time frame, you'll see that that's not at all what's happening. So always keep in mind that you do want to zoom out. You know, if you're on the 5-minute chart and it's looking like, you know, things are falling off the bone, switch over to the 30-minute or 60-minute and see what's happening. Because you may find out that what looks like is going, you know, falling off may only be a small pullback while it goes back or while it continues going where it's going. This is a 30-minute candle on Amazon. If we were to look at Amazon on the daily, see if there's opportunity for a weekly trade for something for next week. Part of this gap has been filled. There's a little portion of it that is still unfilled. All of this here is still not filled. All right, the rest of this gap is done. It's just trucked right on back through it slowly but surely. Pivot machine gun dropped this back off. And today we are kind of green on the day on Amazon. But if we were looking for a trade for next week, Jamie, what are your thoughts? What do you think we would see on Amazon? Where would we go? Which direction? Jamie, are you still there?
Sorry, I hit the button twice. As of right now, wouldn't I be doing the call credit spread? I can't really see on your screen.
Potentially. I just was wondering what you were thinking.
Yeah,
you can't see my screen?
No, I'm saying the from the way it looks on my screen, the candles are small, that's all.
Okay, but you can see like the trend and stuff that's going.
Yeah. So yeah,
one of the things that go ahead.
No. I was thinking from the way it looks, I mean, I wouldn't have a problem going above it. What this line that I'm seeing, which moving average is that? Assuming that's a moving average, it looks like a green line.
It is. It's a 9.
Okay.
9.
All right.
Amazon is showing bearish on the watch list. I'm looking at the PeakBot watch list and it's showing bearish at this point. So a call credit spread could be in order. So let's see if we go to Amazon. That's what happens when you that master trader. Them master traders can look at the chart and be like, yep, this is what we doing. That's you. I'm not being facetious. I promise I'm not. Yep. Either 182.5 or 185. We got plus minus 6. Plus minus 6 puts us at 185, 183. 183. So see, I probably would go with 182.5 because it's got 74% probability to have the money, but safer would be 185. Let me go to the vertical and see. 185, 187.5 is paying $25. That's exactly 20%. I mean, 10%, sorry, exactly 10%. If you went a little closer, then you would pull in $47. See, that would be more my speed. That'd be more my speed. Let me write Amazon down. Oh, that was Lily, right? Amazon 182.5 on the call side. That's pretty good money. Pretty good money. I think what happens is, and this is completely off topic, but is anybody here a fast eater? You eat fast? I'm a fast eater. And I realized after I've eaten too fast that I ate too much because I ate too fast. And then I'm uncomfortable because the food has to move and it doesn't move at the same pace as it used to. Okay. Where are we? We looked at Amazon. We were going to look at AMD. We're going to look at AMD. No, we were going to look at something that came off of the, XLF. That's where I wanted to go. I had XLF, Goldman Sachs, and MasterCard, XLRE, Amazon. Oh, let's look at Netflix too, because Netflix might offer opportunity. It's 1.3, but Netflix is at all-time high, so it really possibly needs to pull back and may provide opportunity for us to pull back. This is XLF right now. Look at their time frame continuity to the top, baby. If you are trading as a buyer, the buy signal has already been tripped. Ting, ting, because once it passed the top of this green candle right here, that was a buy continuation. And you got full time frame continuity to the upside too. Let's see what you would do. Do we have a signal, an actionable signal as a stratter on the 30-minute time frame? Actually, you do. Right after it passed this 2 right here, you could have gone and kept going. Time frame continuity is good stuff. 15-minute chart. What do we have here? Now we've got a hammer. Actionable signal is a hammer. Once it surpasses the top of this hammer, then you can continue on upwards. But this is it's pulling back. This hammer, of course, is red. So you need it to turn back around and then go above the top of this hammer. It's got 5 more minutes for this candle to close. The top of this hammer, which is the high 44.37. Once it passes 44.37, which is like 3 cents, then you can go on up from there as well. Now, again, like I said, if the finance, the XLF in this sector is going to benefit the most from an adjustment in the rate. They're going to benefit heavily. So that may be why XLF is kind of on the move. Jamie, were you getting ready to say something?
Yes, I was going to say, for those that don't know, please explain time frame continuity.
Okay, thank you. Time frame continuity is basically where you're looking at the trend on the different time frames. So this is another indicator. You can use it as an indicator, just look at different charts, but you're looking at on the hourly chart, XLF is green. On the daily time frame, XLF is green. On the weekly time frame, green. Monthly, quarterly, yearly. All these time frames are showing XLF as green. So anytime you have time frame continuity, which is where it's kind of the same across, this can give you confidence. I'll use that word, confidence, that going upwards is still a safe thing to do. Now, you don't want to see time frame continuity across the board, and then you're like, I'm going to sell. I'm getting ready to short this. I'm getting ready to buy puts, because it's not going down. It's going up at this point. All indications, even though this particular candle may be showing that it's going down, it shows it across the board, by and large, hourly, daily, weekly, so on and so forth, that it's still on an upwards trend. Okay, that's what that is. So if you're going to trade this, you trade it with this upward trend in mind, right? And you look for your signals, your actionable signals that will let you know that I can take this trade after the signal, presents itself, and go on from there. Okay, that's time frame continuity. Goldman Sachs, XLF, if you want to trade XLF, would be good. Potentially put credit spreads. Let's go look at, because I don't know if XLF has decent premiums either. Jamie always hangs out in these sectors, which I do too now, because one of the things I've learned is to look for the sectors to see what the sector is doing from the, movements, and then look for things inside the sector to trade. So if the sector is doing what you want it to do, like it's fine, you got an actionable signal on a sector, then you can look at the things inside the sector to see what's, of course, you can just trade the XLF, and you can just trade the sector itself, or you can trade individual stocks inside of it and then benefit from individuals, or you can just benefit from the overall sector. Good thing about sectors is their options aren't really expensive. Right. So if you're trading XLF, it's $44. But if you're trading, Amazon or something I don't know if Amazon's even in this space, but something else in the same space, it may be more expensive. I think Goldman Sachs is in this space, and it is $508. So if you're trading XLF versus Goldman Sachs, they're in the same sector, but Goldman Sachs is going to cost you a whole lot more. See, these call options are $4.85, but the XLF call options, XLF, there we go. The XLF call options are $26. Definitely a bit of a difference between those two, huh? Just a little bit. Now, of course, you're going to have a difference in ATRs. A $508 stock is not going to move the same. It's going to move a lot faster than a $40 stock, unless it's got a lot of volatility. But if you were looking here, let's say you were looking for next week and you were looking for a put credit spread, 43.5, if you wanted to do that. 43.5. Nope, not going to be worth doing. 42.5. It's paying $6. No, I would not suggest anybody do that trade. Nope. Now, if that didn't work for you though, and you wanted to still get access to what's going on, you could, of course, get in on a call debit spread. So we had a put credit spread going up, or you could do a call debit spread going up. That's going to cost you $19 for a 50 cent. So $19 with your opportunity to make $31 per contract, right? So that's going to offer you something different there. Or you can go straight calls. If you thought, debit spreads, I'm cool, I just go straight calls. You can pay $28 and just go straight with calls. Just buy calls and go with that. Now, this is kind of close in time for you to buy straight calls. It's only a week. If you're going to buy calls only, you probably should go out another several weeks. But if you're going to do debit spreads, you can do debit spreads in shorter time frame because the theta won't eat up the same. But even and for September 20th, which is a few weeks away, 28 days away, you could still buy, calls in the $30 and $40 range here, 45.5. You could still go with the $23 call and have 28 days for it to do something. Right? All kind of ways to make money off the same thoughts. But let's look at Goldman Sachs. We were just talking about Goldman Sachs could be the upwards opportunity if you're going to look at that sector. Goldman Sachs don't have a whole lot of open interest and volume, probably because you look at the volume, it's like non-existent. Oh, that's September 20th though. But let's go shorter time frame. Maybe you'll be more interest closer. Not a whole lot. Right? 74 is where I would go. 497.5. I'd go down in here, 495. Vertical 497.5. 495 is paying $55. It's a 20% return on Goldman Sachs between now and next Friday. That'll work. I don't really trade the credit cards a lot, but there are people who do. MasterCard, Visa, those are popping because they're in the financial space as well. I saw somewhere the other day that cars and stuff, people's paying for their car payments. There is a lot more delinquencies, but the credit cards, people aren't being as delinquent with their credit cards. They're keeping up with those better than they are with their car payments, which I think is interesting. I think if I was to give it a thought, it's just that credit cards and things like that, people are using them for multiple things, and you don't want to lose access to that credit. That would be my thought. I wouldn't want to lose access to my credit. If I didn't know what was to come and I was anywhere tentative about what was happening in the future, I would want to continue to have access to my credit. Now, I would still want my car too, by the way. So I wouldn't be like, I'm paying my credit card bill, but let my car payment go. No, I wouldn't do that. But I also don't have a car payment anymore because I bought my car for cash money. I'm like, And I got a little scootabout, I call it. So it ain't like I got no big fancy car that I paid cash for, but it takes me where I need to go and it's mine. I ain't got to worry about nobody trying to pull back their truck up. Have y'all ever watched those repo videos where the person is repoing it? And like this one I saw, the guy is like literally, the person's at the car wash washing their car, and the person and the repo driver pulls in, and like the person, their car is basically their car is just still being washed, and then he just connects while they're busy blowing off I mean, it's not funny, but the video is funny. He picks their car, and people jump in their cars. They're like, don't want the car to go, so they jump in the car. I'm like, what are you doing? Well, and so I guess the driver can't drive off if you're in the car. But okay. Oh, Tanya, I forgot to look at Exxon. We got to go look at that. We got to go look at Exxon. Ay. Okay. Let's see what's been said here. Volume is different in different time frames. Absolutely. DJ Boat. Hey, military. Tanya says, I eat fast. I do too. I eat way too fast. Ward says more than I like to admit. Elf is here. Somebody wants to look at Elf. We can do that. Exxon, we can look at that. Rut, Jamie's on his list. And I probably need to open up my Robinhood so I can see what's going on with that Exxon. Because you said you had one different strike than I had, but I think we have a strike the same, and then one that's not. So one side of my Exxon is ready to close, and the other side ain't. I got 116. Yep, it's right at that strike. Listen, don't fool up with me. I will close you. Let me see if I can get that one side because it's worth $1. Let's see if it'll feel. Because Robinhood don't like to close you for $1. They want you to pay $2. Okay. This was Goldman Sachs. We're going Netflix. Yeah, Netflix is getting ready to get back into that gap. Ooh, baby. Where we at? 15-minute chart, 15-minute candle. It went into it a little bit, but it didn't go all the way. Let's see what's going on in Netflix. Netflix has been running hard. It's the $700 it got up here and couldn't sustain. But look at this run. It's a lot of upwards movement. And what people do is they move their stops with this. So one good strong drop will take out all these people who are riding calls. And it'll drop. And if it drops fast, it'll drop past before these people can even get out of their trade. It'll be done. But this is where we are on Netflix. I personally, if I was trading it, I would look at the top side and look at something to pull back because this is a lot of green. Even though the time frame continuity does show green, it hadn't been up here. And we know Netflix know how to fall because we've seen it. You've seen it fall. Netflix knows how to fall off the bone, as they say. It knows how to fall off. I would look here right above, maybe above that 700. Let's go see if we pull up the option chain. For next Friday, we've got, I probably would go at 710 or 715. We got plus minus 22. Adding 22 to this puts us at 610, 612, something like that. 710, sorry. Yeah, I probably would go with 710 or 715. Change it to vertical. It's a 5 spread up here, though. 710 is paying $82 for a 5 spread. 715 is paying $68 for a 5 spread. Both of those is over 10%, much more 15 to 20%. Of course, if you wanted to be on the put credit spread side and only do 2.5 spread, you could do that. Probability out of the money where you got to go down pretty far to get to the 2.5s. So maybe a debit spread, a put debit spread would be the move. Believing that it's going to go down, a put debit spread, you can get somewhere out of the money. This one, you're going to pay $50 with the upside of $450 because it's a debit spread, which means you're going to pay $50. Oh, no, that's wrong. I went to the wrong column. You're going to pay $50, right? But you're going to be able to have the difference of this 5 spread is going to be your potential profit. So 450 is your potential profit. I would probably go out a little more in time, maybe to the 20th. Do a put debit spread. Oh, look at here how they, in the middle of all this, threw in a 2.5. Wonder why. Why'd you do that? Pay $45 with the potential of making $105, $205 because it's 250, 2.5 spread. Listen, if you don't know about debit spreads as a way to play momentum going in one direction, then you might want to check that the debit spreads course out training in my course. You said hammer on the 30-minute for Netflix. Where you talk about Netflix, Carmen? I'm going to put here debit spreads training for momentum trades without the theta. Without the theta. You don't have to worry about theta. Debit spreads training for momentum trades without the theta worries. Let me make sure I type that all right. We going long today. Educator, guess I put a 2 in here. All righty. 30-minute on the Netflix. I don't see a hammer on the 30-minute chart on Netflix. I also do not have it set for the extra hours. Like, you know how you get extended hours? I don't have it set on extended hours. So mine doesn't calculate. My chart doesn't calculate extend on TradingView. It doesn't. Let's look at it over here on Thinkorswim. This is Netflix. Yeah. Netflix already pulling back. Okay. I had some things. We had let's look at Exxon. Let's see if Exxon wants to keep doing the do. We're on the 30-minute chart. I'm fine with that. Are we at Exxon? Yes, we are. Come on, baby. You can come on back down. We don't want you up there. My strike is 116. So I have to watch because these days I don't take a whole long time to put on my running shoes. Exxon, it looks like it's at 115 or 116.04. Looks like just a bit above. And this looks like it's trying to hammer. I may have to. This is where we were talking yesterday about where you look at the chart to determine whether or not it's going to probably keep going. This long wick means there's buying pressure, right? There's buying pressure. There was some up here, but now this turning into a doji, but it's also got a long wick down there, acting like it wants to keep going. Act like you want to keep going. Right? This is where we use, I'll give it a minute because it's 10:40. So the market's been open an hour and theta does work for, but I will watch to see what are we doing here at the 116 mark. Because if it pushes on through there, not sitting idly by, not going to do it. ELF. Okay. That was on the list. And then we'll go to RUT. This is the 30-minute chart. Oh, ELF is just kind of sitting in a zone. Get in the zone. Not the auto zone, the ELF zone. I think ELF is one of those companies that unless they just do some, jacked up, they're going to be around because people are going to continue to put money on makeup. People are going to keep putting money on makeup. So if I was trading ELF, I probably would continue to go with, comfortable put credit spreads, even though you do see that they do seem to go up and down and pull back a little bit, but just know the people are going to still be around. I'll be around. Okay. Um, what do I see now though? I see we're into a gap. I see it's into the gap. Dancing around. Y'all know we put on our quartiles. It's currently a little bit above the 25%. I think my automatic vacuum cleaner is stuck on a bathroom rug. I don't hear it anymore. And I didn't close the bathroom door. He doesn't like bathroom rugs. Yep, it went up to about 25% and then pulled back. Then pull back. Another place of resistance here is going to be the 50% mark. Though you're going to have each of these levels is going to be resistance, but you will have it. You definitely can count that halfway mark, those 25%, and then the top of the gap. So if I was looking here, I like the call credit spread and the put credit spread. I like them both because of just where it is. It's not going, it's not going to push through that gap. This gap is pretty big. It's going from 167 all the way up to 182 and some change. Yeah, it's not going to push through, but so fast. So let's see what we see for ELF for next week. Low volume here too. Voila. Plus minus 21. So I'd go up, so down to about 149, 150. Good thing is it takes you down to a one spread. 149, 150 if you want to get down there for the one spread. And then up on the top side, it's 2.5 spreads. So 149, 150. Those are paying $22. 22% return. Of course, close it off when you're. Oh yeah, Exxon is still pushing up. It's at 116.26 now. That was F. I would probably continue to go with the put credit spread because it's a one spread. I wouldn't necessarily want to do 2.5 or that. Oh, he's still going. I hear you now. Rut. Jamie, talk us through Rut.
All right, what you want to know?
Whatever you want to tell us.
Whatever you like.
I can say whatever you like.
Whatever kind of information you like.
It went through this gap. It filled that gap already. Did you play put?
Which
Did
chart
you
are you
trade
on?
the daily?
All right, I'm on the 15-minute, and I've marked the candle for the breakout.
Okay.
And it has taken off like a rocket.
Okay.
But I don't get in until I'll look before 10:30, but I don't get in until after 10:30.
Okay.
So what I'm looking at right now is trying to decide if this is a point where it turns around. Otherwise, I will be getting in on a put credit spread for a expiration on Monday. Unless it starts turning around, which is about what it may start doing around this time frame.
Yeah, so, you can see here, you see my pivots? These gold lines, it has gone to the top, almost to the top pivot, to the highest resistance, and it's, just kind of hanging out up there right now.
Yep, and it just finished the candle on the 15 minutes, so I probably would be waiting just to see what is going to happen.
Okay.
But yes, I would be looking at while I'm trying to figure out what that's doing, I will be looking at the options chain, and I'll be looking at, so for what is that, the 26th, I will be looking at somewhere around 2180, 2175.
As a call
Um,
credit spread or a put credit spread?
put credit spread 2175. That's where I'll be looking if it's going to be still going up. If it looks like it's going to start going down, then I would be at around 2240. Now, that's the number. That's about the number that's roughly 80% out of the money. But I make sure that the bid ask spread is less than $1. I
Okay.
said the bid ask spread. Okay. I don't want nobody to misunderstand me in case I didn't enunciate.
So the bid ask spread you're talking about at 2170, you're looking at between just at those main strikes? Like at 2170, you look to compare the bid and the ask at 2170?
Yeah, I mean I do my, I build my
Yeah.
legs one at a time, so I'm not sure how it would look on because it looks like yours is just one across, but yeah, the bid ask, I just make sure that it is I make sure that it is less than $1.
Okay.
So according to X options, obviously you want to be a little bit closer to the money, but bid ask less than $1. So that usually gets me about 85 to 90 cents, somewhere in there. And that's pretty good. If it gets me about 90 cent, then and it fills side one, when it does side two, I put in 4.55 because I get 45 cents. I always put in 45 cents as my take profit.
Okay. Okay. So half of it about.
Say it again.
I said that's about half of what you take in premiums.
Yeah, I wasn't even looking at it like that, but yeah, that's a good point. Um, I've been experimenting with different amounts, and I feel like I'm okay with 45 seems to be okay. Probably,
Okay.
40 might be a little bit better, but I like 45.
All righty.
So the main
Oh,
question right now is how to tell what it might do over the next few minutes, and right now it has turned around.
it's turning around for me. Yeah.
So now
Looks
here's
like
the
it.
question: in this situation, are we waiting until this closes as well, or what?
Yes. I mean, yes. If this is your entry, because a candle can do all this and can pull right back up here. So now you need to, if you're waiting, if you're on, this is the 30-minute chart. So you're on the 15-minute. But yeah, so
Mm-hmm.
your yeah. I'm just, the short answer is yes.
Okay, so then we wait 9 minutes, and if this and if this thing decides to start coming back up the other way, then what?
You wait because you want to make sure that it's confirmed. So you could go ahead with this now. It is gone. You could go ahead, but you've also seen it, and I'm sure you have, where like this candle here. Think about this green candle here. This candle went down, down, down through the course of the 15 minutes, and then it pulled right on back up to here. Right. So is it possible to show a long wick or to have to go down really far and then pull back up? Absolutely.
We get no
So I
argument for
mean,
me, but I
I'm
guess my
saying, but
question
yes, I mean, I
is,
think it's the piece that's probably the hardest piece is the piece of being patient, and I know this from experience of being
so the
patient while
question
the
is
candles
then,
do the thing.
what would we be waiting to look for as the entry?
It depends on what trade you're doing, to be honest. If you're doing selling trades, you could have, if you thought it was still going this way and it looks like it is, you could go ahead and enter that. If you're entering as a buyer, you're gonna want to make sure that your timing is better. You got to
This is
worry more
for
about the timing.
PVC. So credit.
Right. So credit, you can go ahead now. I mean, Yeah. So have you done your first side yet?
Not live, no. And the other thing is, as an aside, time frame continuity. So far, all of the time frames have been showing support. At least it
Okay.
was 15, 20 minutes ago. I haven't looked in the past few
Showing
minutes.
support meaning they're green or meaning they're red? Because what does showing support mean?
Showing support meaning the moving averages are under current
Oh,
price.
they're going upwards and they're fanned out going upwards.
Last time I checked, yeah.
Okay.
Now things might have changed since your boy got to talking.
Yeah. Very well could have. I thought I had moving averages turned on here.
I literally was just thinking the same thing.
I really thought I
So yeah,
did.
on a 15-minute candle,
What are
I
my
got
moving
them right in
averages?
a
I'm
row.
doing
9, 20, 50, and 200 showing
that now.
support. And then on the hour, maybe not in that order, but definitely all of them are under. Also
This is
on the
let me get the right time frame because
half hour and 4 hour.
yep. I mean from that standpoint, and this is now pulling back to the 20, so or pulling back to the 9. That's what Rut's doing right now, but this is what we would call an engulfing candle, right?
Yeah, that's another question with that. Like, yeah, I don't want to bore y'all with that, so I'll leave that alone.
Some of our candle time frames, you got to keep in mind what is the trade that you're doing and the time frame that you're working on. So because you're looking to set something, you for basically you need a sustained move for a period of time. So you do need and want the momentum for a period of time so that way you can set the PDT hat. So you want momentum. You want to make sure that momentum is going in the same direction that you want it to be. So if time frame continuity on shorter time frames doesn't all line up as red, then this is not what you want. So okay, I'm going to show you how we can do that on Thinkorswim. You can say, okay, I'm here on Thinkorswim and I've got rut going right. I'm on the 15-minute time frame. I'm here. I want to be on the maybe I want to be on the 5-minute time frame. I also may want one that has it on the daily because you do want to see what's happening on the daily. And maybe you got another intermediate time frame, maybe the 30-minute time frame, right? So you're looking, maybe you do 30-minute and 1 hour versus the day. Maybe you look at the 1 hour time frame instead, or the 4 hour, something that's a little bit longer term so you can kind of see a longer term look. But you look at all of these to see, are they red or are they turning red? Like, are they coming back down? Are they all reversing? Right? This is what you want to look at. Are these all reversing or what are they looking at? What are these looking like for going in the downwards? Because you want a sustained move for you to set their PDT hat. Okay, so the 1 hour chart is still showing green, but the 30-minute is now looking like it's wicking and potentially making a turnaround. The 5-minute chart has already turned around some. You see here, this is a reversal, and the 15-minute chart is doing the same thing. Remember yesterday I talked about how reversals start on the smaller time frames and then they continue into the bigger time frames. Well, the 5-minute is showing a turnaround. The 15-minute in the middle of one. 30 minutes is trying to set up for one. And the 1 hour is still showing, but it doesn't mean that this is going to continue. So again, you're looking for a sustained move going in whichever direction, which in this case may be downwards. So you can do your potentially, not investment advice, your call credit spread, and then ride it down into the put credit spread territory to set the other half of your PDT hat. My thoughts.
Thank you for your thoughts.
Absolutely. Now you
So
got to
you're talking about
Having these
Say it
multiple
again.
time frames, though, having these multiple time frames gives you the opportunity for you to see what's actually happening on multiple time frames at one time. What is the stock actually doing, and what is it looking like on multiple time frames?
Okay. Um. So here's the thing. So even though, just so we're clear, even though it looks like basically what you just described, it looks like it was going to be coming down. So even though the moving averages are showing support, the fact that it's coming down right now, which is technically going against what the moving averages are saying,
Right.
you would be writing that down.
Not necessarily. So you're taking all these pieces of data into account as you make your decision. We do know that the moving average is a lagging indicator, which is just taking previous motions and averaging, basically aggregating the data and spitting it back out. We also know that candles are going to want to, remember we talked about before how the candles will go away from the moving average and then come back to it and then use it for support and go again. We've seen that. So could this be doing that? Absolutely. Could this be coming down here just to bounce off of this moving average and go up some more? Yep. This is where the sit and watch happens. This is probably the hardest part for me, I know, of trading, is the sit and watch to see what it's going to do while you're waiting for you while you're making your decision. And sometimes we can have too much data, so that when you can have data overload, but you do want to watch until you're satisfied that it's picked the direction or not. We do know that Powell is still doing his thing, so you wouldn't be in any real rush to rush in, because you don't know how the market's really going to respond to all the stuff that he has to say.
Whatever it is. All right.
Yep. Whatever it is. Julian? Okay. I think we covered everything that's there to be covered. Where did I put it? There it is. The E2T membership is open. Of course, it's a group of people. We all hang out in here together. Like many people got Discord and all those things. We have our little Telegram group. All right. Basically, we want to focus on spending less time at our screens, but we want to create more profits. We have a great and supportive community of people. We do work on daily profits, weekly profits. We've spent more time more weekly, but we do work on daily profits, kind of a good mixture of how do we use theta decay for our own benefit. And we do trainings on profitable strategies, that being the seller strategies, some of the buying strategies, some charting strategies that can work for anybody. You know, you learn how to do spreads, credit spreads, and debit spreads. You don't got to learn another strategy, because those two will work in every situation. Credit spreads and debit spreads work in every situation. So in the membership also is where we're doing the charting challenge for September. So you're going to be able to join the charting challenge and have all the benefits of the group as well. Okay. Okay. Let's go ahead and wrap up. We've been here much longer today than we normally are here, but that's because I'm off on Fridays and I got time today, and I went walking already, so I don't feel like I'm pressed to go and do my little exercise. I did that this morning. All right, our declaration. I declare I'm a great trader. I declare I'm a successful trader. I declare I'm a focused trader. I declare my wins exceed my losses. My account's growing more and more each week. I'm a wise and knowledgeable trader. I always make smart and lucrative decisions for my portfolios. I declare I'm a level-headed trader who does not trade my emotions. Go ahead and like and subscribe, by the way, to the channel. It is you who gives us the power to get wealth, Lord. You teach our hands to war and our fingers to fight. Help us today to trade wisely and strategically. Give us more than enough so we can have what we need and enough to be a blessing to others. In Jesus' name, amen. Amen. All right. So we're going to go on into the market, which you all are already there. Remember, Fridays by themselves are bananas, and adding, Powell and Jackson Hole hasn't made it any better. I'm going to go back real quick to an SPY candle, SPY chart. I need to link these charts. Maybe I'm going to change this screen, Jane. Maybe you can tell me how I can do this. I want to link each one of these charts back to the previous chart. I don't, you know what I'm saying? Maybe if I make all these green, they'll automatically link back. Is that green? No, that's 2. I want to link these together. I want it to automatically link. I think I got it. 2 and then 2. That way, when I change, it changes everybody.
Yeah, they just got to be the same number.
Yeah. What I do want to do too, when I open up my chart, I don't want it to always open up with all this. I need less. I need less showing.
Less what?
Less candles.
I don't know what you mean.
There's too many candles here. I need it to spread out more.
Oh, that. Oh, I don't know what that's about. Price zone, maybe. It always seems to reset for me, and I can't get it to.
Yes, it does. I don't want that. I want it to. I don't want it to do that. It says to chart scale, it goes to auto, but if you do manual, but that means it's just going to automatically stay where you leave it, and you've got to manually do it every time.
Yeah, I have no idea how to get it to remain how I want it.
Yeah. Right click. Auto scale. I think it would be auto scale, but fit patterns, like custom, go and say custom price something. Custom price intervals. What does that mean?
You is not about to give me the line.
I don't know what custom price intervals is. Oh, price will be over here anyway. I don't want that. I want to fit patterns, fit axis. Oh, price axis expansion. That's price. No, I don't want that. Anyway, I'll change this to manual, and maybe it'll quit filling in all that at one time. All righty. Okay, everybody. I came here to go look at SPY and see what the price was doing. That's what I came here for. Got always distracted. Y'all see how it's come back around. I think we're going to probably come down here and try to fill this gap. Let's see. It's already started going into it a little bit with that last candle. It's a wick, long wick. The buyers don't want to get in there. The bulls say, no, don't do it to us.
What is this that you're on?
SPY.
Oh, okay.
That's a 15-minute chart. This is 5. This is the 30-minute chart down here. And that's the 1 hour. Come on, where are we? Okay, that's what's wrong. I'm too far away. Now that it's manual, I got to do all the work. Okay. There we go. Nice little turn back, but it may be just a dip in here. A lot of volatility is expected for today. So those of you who are trading today, please keep that in mind that, I don't know how long Powell is going to speak. And of course, that the longer he speaks, the longer the opportunity for stuff to just do what it do. All right. So trade wisely. Friday, don't ruin your weekend. I've ruined way too many weekends trading crazy on a Friday. And the weekend just goes into the tank because didn't exercise good risk management or good, didn't manage myself, my emotions or whatever on a Friday. And then the whole weekend ends up getting ruined because you're upset by how the weekend went. About how the trading week went, not the weekend. I was trying to make sure that my charts, my candles were filled candles. Every time I fix this same stuff, it goes back it goes back to like open candles. Anyway.
Every time.
Yeah. The style, though, will be different for each time frame. You have to set the size you want and then go to style and save style. Okay, so I can set the size I want, like here, and then go to style, you're saying, Carmen, and save the style? What are you going to call it? Regular. I want regular size. Oh, that's an E. Regular doesn't is not spelled with an E. All righty. I'm gonna get off here. All right, y'all. We will talk soon. See you in the market. If y'all need me, send messages, all the good stuff. Okay. Looks like SPY up here to the right of the 5 minute bounced right off of that gap and went back up. All right. We'll talk later. See you in the market. Goodbye, everyone. Stay green and let's get this money. All right.